Hey guys, welcome back to more economic questions that we will be answering. Today we're going to be going over chapter 5 in the book. First question is, what is an equation to calculate a firm's profit or loss? The equation is taking the company's total revenue minus the total cost. Number 2, which two types of costs does economic profit take into account? Explicit and implicit costs. Those are the two, explicit and implicit costs. The definition of explicit costs is an explicit cost is a direct payment made to others in the course of running a business, such as wage, rent, and materials, as opposed to implicit costs, where there is actually no payment is made. An example of an explicit cost is just a normal business cost that appears in the normal general ledger. Implicit costs equal to what a firm must give up in order to use as a factor of production for which it already owns and thus does not pay rent. An example of implicit cost is the loss of income on funds on the depreciation of machinery for a capital project. Number 3 is, how do profits or losses act as signals to make what society wants most? So, in my opinion, they signal the need for adjustment in the market supply. If there are losses, the quantity supplied will decrease and the price will rise. If there are profits, the quantity supplied will increase and the price will drop. So by seeing that fluctuation in between how much the product is being sold will decrease the price and people would start shooting up more supply. This helps businesses being able to decide on what products they need to be selling and what's getting sold the most. Number 4 is, what role does diminishing a marginal product play in determining the ideal mix of a labor and capital for a firm? It shows when increase in labor starts to make a slower rise in output. And those are the questions for today. Thank you for listening.